Is the crypto cycle over? Are altcoins still going to perform, or are we going to see all our profits fade to zero? In today's video, I will build on the previous video that I made where I looked at crypto specific indications, and now I will overlay macro data points with the crypto cycle itself and make an informed decision at the end if we are likely to see expansion for the asset space or not. And the first thing I want to share is the PMI index, and I want to compare the US PMI index versus Bitcoin. And I've drawn the PMI index on top. And for those who do not know, the PMI is basically a basket provided by the ISM, and it's the product manager index. It has manufacturing services and all other smaller components all together into one index called the PMI. On top, we have that in purple. And what I actually did is I draw vertical lines whenever we saw a low or a high for the PMI. So starting from 2016, because I do believe that prior to the cycle of 2018 for Bitcoin and crypto, the crypto space was highly correlated to the supply and demand dynamics of the halving. I tend to believe that post 2018, in the last two cycles, crypto moves a lot more with equities and macro data and liquidity and all that kind of stuff. So we started our measurement in 2016. So I've drawn vertical lines. We can see when PMI is trending up, what is Bitcoin doing? Yeah, 2016, when PMI is going up, we see Bitcoin moving up. When we see PMI going down in a downward trend, we see the same. And we also saw the same in 2020. When PMIs turned positive, we saw a small crypto rally in Bitcoin and in altcoins. And then we saw a crash, and crypto crashed as well. Do note that crypto crashed a little bit earlier than the PMIs, because the PMI data is actually a lagging indicator slightly on crypto. So it's not one-on-one, but it does seem so far that it is a good directional tool to overlay with crypto. If you look at the bull run of 2021, we see the same. We see expansion in PMI, we see expansion in crypto. And then when PMIs turned down, crypto in 2021 or Bitcoin in 2021 made a new minor high. That new high was on low volume. It was also a Wyckoff distribution. So basically it was a manipulated event, which is really clear right now. And then we went down into a bear market until PMI bottomed and we turned back up. Now, we did not turn back up sharply as in prior cycles. So that's an anomaly that we can see right now at the start of or at mid 2023. We started ranging slightly positive, but we do not see a strong trend as we have seen in prior periods. And even when we are only slightly up in the PMI, Bitcoin still managed to have a solid performance of roughly starting at 30K all the way above 120K. So as long as PMI is improving, we do notice a positive correlation. Now, let's take a look at altcoins. Are altcoins moving the same or not? Because we have to make a difference. Because in the current cycle, as you have seen maybe in my last video talking about crypto specifically, Bitcoin has different momentum, different kind of movements compared to altcoins. So I want to take a look at altcoins as well and see if we see the same kind of behavior or if we can notice something different. And here basically we see the same. Once more, when PMIs turned up in 2018 in the cycle, altcoins also turned up. They had a peak roughly 8 weeks prior to the peak in PMI, but most of the trend, they moved in the same direction. So directionally, it's still correct. Then we had a lot of downside until March of 2020, 2 times down, same kind of movement. So we saw a small surge up in 2019 when PMI bounced. And then when it made a second low, we also saw the low for altcoins. And then we turned positive on PMI, and we also see we turned positive on altcoins. Now, there is a big difference straight away. In the cycle of 2018, we peaked prior to having a peak in PMI. And in the cycle of 21, we had our first altcoin peak, also persisting after PMI peaked. So we clearly see that PMI is turning bearish and is going lower into 22. And while it's turning around and it's already negative, we still see altcoins surging higher. So we actually made a new high, the same as with Bitcoin. And that was actually 32 weeks after, so more than 6 months after a peak in PMI. So there's no strong correlation between the actual peaks, but directionally you see the same play out. If you look at the point where PMI peaked and it moved lower, then generally speaking, altcoins lagged. They had some momentum, probably because of rotation in the crypto space from winners like Bitcoin into altcoins. That is a cycle that does occur, but eventually it did move lower. And when PMI bottomed, we also just saw our bottom in altcoins occur earlier, roughly 6 months earlier as well. So there is a divergence in actual timing, but directionally this is correct. And we saw that again right now. If you look at the current PMI peak, which we had around the end of the first quarter of 2025, then you can see that the altcoin cycle peak occurred 9 weeks before. So we are either front running or having a delayed reaction. It's not a tight correlation for exact bottoms and tops, but considering the correlation with Bitcoin is a lot closer, it does have some value in making a good directional assessment for us, even with altcoins. Now, let's take a look at PMI, and I also track the services and manufacturing in my customized recession indicator, which I also share on my social media every month. So if you haven't seen it and you want to see it, follow me on X, Mulder Sonny, and you can check it out. All the updates are there. What we can see now at the left of the screen is very clear. Since 2023 already, we have been in a bear market for manufacturing. We have been in contraction, how they call it, which is basically below 50. And that means we are in a recession. So recession for manufacturing, and we turned positive at the start of 2025. Then we had a small blip, and then we turned positive once more. If we look at the PMI services, that remained pretty strong, not in recession, more to the upside, but not extremely strong, but overall good. So we are clearly seeing two different kind of signals inside the PMI basket, which really are important for the global economy. And if we look at the PMI index itself, at the total index, we see this reflected by having a actual number below 50. And as I said before, a PMI index number below 50 means we're in contraction. Generally, that means it's recessionary. Are we always in a recession? No, but this indicator is showing weakness in that specific part. If we are above 50, then we are in expansion. Economy is doing good. Everything is just driving normal. So no issues. What we see right now is very interesting because the period that we have remained roughly negative has been already one of the longest periods all the way back in the last 25 years. So what do we expect? We already saw some kind of recession in PMI, which also drove the number below 50. We saw that clearly in manufacturing, they struggled with the corona lockdown, with the trade supply issues, etc. Then they recovered from that, and we see services holding on strong. So it is safe to assume that because we have been in contraction for so long, that we could assume that we are moving higher and higher. And if you connect all the lows together, you can see a clear trend line. We are moving out of contraction, one of the longest contractions in 25 years. Now, PMI is actually a leading indicator. So what actually drives expansion? So what actually drives this index upwards and what drives the index lower? We get higher numbers as we see Fed rate cuts because that provides looser financial conditions. It provides less liquidity strains, less interest rate payments on debt, which basically means it's kind for the economy, it's kind for investors as they get less stress. And Fed rate cuts basically drive PMIs up. And we are seeing Fed rate cuts right now. We are in the part of the cycle where we are seeing cuts. We have already been seeing cuts, not that many, but we have seen them. Fiscal stimulus, we are in a fiscal deficit right now. We have a lot of deficit in the US, and that continues to grow, even with the Doge efforts from Elon Musk and Trump at the start of the year. They did not save a lot of money. A lot of money gets created. The fiscal deficit continues to go up. And because we have a deficit, it needs to be fueled by incoming money. So fiscal stimulus is a certainty. The money supply only goes up. A third driver that we can see as well for expansion is consumer confidence. Consumer confidence right now is at a very, very, very low level. It's very negative. I think it's roughly at a 50-year low, depending on what kind of measurement you like to use. So expansion on all three areas is, in my opinion, likely. When can we see contraction? When we see like the trade wars, when we see increase in trade difficulties, rising inflation, export reductions, stuff like that is basically negative for the PMI and could drive us lower. But considering we have been in a contraction for so long and what I said prior, I would assume the likelihood is here that we are trending upwards and not trending lower. Time will tell. Either way, if you expect upside, then that basically means we can see a positive pushback for both crypto and altcoins if we look specifically at PMI. Another indicator that I want to talk about is the Fed funds rate. The Fed funds rate is shown on the bottom in green. On top, you see the Bitcoin USD chart. And is there some kind of signal that we can take looking at this? I found something which was really significant, and that is basically that whenever rates go up, it does not imply that it's bad for the economy. We have seen higher rates for a long while, and we see stocks and all kinds of markets going up as well. Because rates are going up, the economy is still strong, so we can basically pay more, have higher rates without an issue. And we saw that in 2018 as well. As rates went up, Bitcoin had its parabolic blow off top. So it's very interesting to see, besides those dynamics, that whenever, and that's what I notice most, whenever rates are stagnant, whenever rates are flat, it seems as if markets have some kind of certainty. We know the Fed is not going to raise even more. They announced they're going to stop. We may see weakness in the future, but we are not there yet because there's always leads and lags. And every time when rates have been flat, we have certainty. And in that certainty, Bitcoin rallies. In 2019, we see this occur when rates are flat, we saw a rally. Then soon after, the rates started going lower at July 2019. And we see Bitcoin grinding lower as well. So rate cuts were bearish for Bitcoin in 2019. As we went lower into the pandemic lows, where rates were basically very, very low, we saw also the low for Bitcoin occur. And then we had flat rates once more for a while. And we see another parabola for crypto in that same period of time. We already came off the all-time highs, but we're still very elevated around 50K area when rates started going up. And then we saw a bear market this time. And as soon as rates peaked and we went flat once more, we do notice that we see a big push in crypto once again, in Bitcoin specifically. And the strange thing here is that when we saw rate cuts at the end of 2024, we actually saw crypto moving up. I think this is an anticipation from traders. They understand that there is a big correlation to crypto, and perhaps they were thinking liquidity is going to improve. So we are bidding up prices. The expectations are rate cuts, liquidity is coming back. They saw massive QE in 2020, and now they are looking at more support, more liquidity, prices move up. I think that drove the narrative differently this time. And that basically means that when we saw rate cuts, the price moved up into new all-time highs. What happened then was another stagnant period. We saw even higher highs, and now we are seeing cuts again. So we are seeing cuts again, and Bitcoin has moved lower. But I think the main reason why Bitcoin is dumping is because people thinking the 4-year cycle is over. Perhaps that is factual. But if you look at the Fed's funds rate, and we look at the rate cuts and we look at this cycle, then we also could assume that rate cuts are going to fuel more upside. Now, this is debatable because in 2019 we saw the opposite. So there's no real clear signal, depending on your bias perhaps, why cuts or moves up could fuel the market. But one thing is certain: whenever rates remain stagnant, we do see big surges in crypto. So there will come a period where they will hold rates when their mandate is perfect. They see no reason to further cut. The economy is going good. And then they will flatten out again, and we will see another pump. And I do think that there is a case to be made that this cycle we saw rate cuts being bullish, that people are going to anticipate the same once more. But that is just speculation. The data is conflicted. So the only certainty we have is as soon as the rate cycle ends, that is likely going to fuel a new cycle soon after. So that is something to watch. The December Fed meeting is coming up. There is a lot of talk from the chairman right now that they may be holding rates in December and they may not cut, despite markets calling for 70 to 80% certainty that they will cut. So that is also something to keep in mind here. I think it's not as certain yet because the chairman speaks differently than what the market is thinking. So I think the December, the last event of the year for the Fed may be very controversial. If we see a pause, then that could actually fuel another upside for Bitcoin specifically. So let's look at another indicator, and let me put my hat on top. Another indicator that I like to talk about is the NFCI index, the National Financial Conditions Index. And this is basically a gauge used by the Fed for measuring US financial stress. It uses over 100 indicators, credit spreads, stocks, volatility, leverage. It's all included in one index once more. So this basically contains a lot of data in one chart. On top, we see the NFCI index versus Bitcoin, below in green. I've done the same. I marked the tops and the bottoms roughly for Bitcoin, and then I wanted to see, are there any specifics? And once more, we see some very specific correlations, as we have seen with PMI, but differently now. When the NFCI basically gets tighter, financial conditions get tighter, that is very bearish for risk-on assets like crypto, like Bitcoin. And we see that in 2017 already, after the peak, we saw tighter conditions, bear market. Then we had looser conditions going into July. We had a rally in alts and in Bitcoin. Then we had a very tightness going into Corona, obviously. And we saw the Corona dump, loose policy, and we saw the all-time highs. Then we have a small anomaly once more, which we also saw in PMI. We got slightly tighter financial conditions. We had a rollover of the trend, and we still made a new high. I think it's likely because of manipulation of big money wanting exit liquidity that they marked it up. It's a minor new high, but it was a Wyckoff distribution nonetheless. It was bearish. overall. And then we saw a new peak in 22, which marked roughly the bottom for Bitcoin. And then we had 3 loosening cycles, which also meant that Bitcoin moved higher into every big impulse it has had so far. And if you look at the right side of the screen, then we see that right now, and we have to wait at weekly and monthly closes, so the week is still running, but right now it looks like we may be crossing to a new low, which basically means we are seeing looser financial conditions driven by policy also being looser. As I said, with the Fed rate cuts, the Fed is cutting rates, which is also making giving markets more room to breathe here. And that is basically good for risk on assets like Bitcoin. So if we see financial conditions continue to loosen in fourth quarter of the year, then it is likely to say that this may add some potential for Bitcoin to the upside. I've taken a look at alts specifically here as well, and I did the same, and we basically see the same kind of behavior when the index is going lower, so it's getting looser conditions. Altcoins surge. When it's tighter, we see lows. Basically, whenever it goes up, it means that conditions are tighter and altcoins do not do a lot. And whenever it's going looser, the policies, the index, sorry, then prices are basically pumping. And it's not one-on-one, but directionally it has really played out. And even when alts failed to make new highs in the current cycle, every major alt cycle peak in 24 of March, in December 24, or in September of 25 was accompanied by looser policy. So if we are looking for altcoin continuation, if you are looking for an altcoin cycle, if you are looking for like the Bitcoin dominance to drop, and even if Bitcoin has peaked, if this index turns loose, financial conditions improve, they get looser, then that could still mean altcoins move up. Even if the momentum is not longer in Bitcoin, it could still be supportive for altcoins. The same with the PMI and the other indicators. So I think this as well proves that there is a lot of correlation between the NFCI and altcoins and Bitcoin, which is likely going to resolve bullishly in the time ahead. Then another aspect I want to take a look at is like the quantitative tightening versus quantitative easing relationships. If we look at, we only had 2 cycles of QT and QE. So they started doing that post Great Financial Crisis of 2008. Then they set up all kinds of safety nets, and they also started actively reducing the balance sheet or increasing it. You can look it up yourself, but basically the first big event was in 2017. And then when QT started, you can see Bitcoin in the candlesticks basically made a big run up soon after. And if you look at Ethereum, we see the same. If you look at the others market caps at alts, we see the same happening. And at the end, when QT stopped, we see that the corresponding trend is lower. So basically Bitcoin turned lower after the stop of QT. And then Ethereum also went lower, and altcoins also went lower. And basically the start is positive for crypto, and the end seems negative for crypto. If you look at the 2017 cycle, that's what we can derive from the first kind of QT. Now, let's check out QT2. So QT2 started in roughly May 22. Bitcoin came from its highs already, was already in a deep bear market. It soon bottomed out and the trend reversed. And all the time that we were in QT, we have basically been moving up. And basically the same for Ethereum. Soon after, we bottomed and we started grinding our way up. And the same for others. We bottomed at the same time, roughly, as Bitcoin, and then moved up. So the question now remains, okay, the start was, again, positive. So will the end be negative again? Then there are a few core considerations that I want to share about this. We only have one reference point in 2017, which is, I think, highly different than the current one, because also like the inflation spike and the debt that was created, it really causes a whole different market dynamic. I think that QT periods differ by market stage. The start amplifies trends, so it boosts a bull or it speeds up a bear. That's something we can really see. I think that when QT stops, it is likely to see short-term dips in consolidation. But on the flip side, when QT stops, we also know there is a big correlation to liquidity. Then very often we see tailwinds because we see looser policy, which you are seeing now, right now as well, as I just showed you at the end of QT, which is supportive actually. And generally, when liquidity is moving up, we also see crypto inflows and higher prices. So there may be a short-term negative effect of dips and consolidation. Perhaps it has been front-run. Perhaps this was not a cycle end for crypto, but they front-run the end of QT. It could be, we do not know. But either way, short-term, it's likely going to be negative. We only have one measure point, but we have to move with that. In 2019, we did see big rallies post-stop, driven by rate cuts and some QE. So that is also something to keep in consideration. If they stop QT and they say like, Trump is doing right now, I'm going to give stimulus checks, refunds, think about some other headwinds flipping to tailwinds, like some kind of liquidity boost coming for crypto may drive asset prices back up. I mean, we don't know just yet, but we have to continuously look at that. We have to keep in mind, though, that effects may be delayed. So it does not mean that QT stops, that markets are going to surge straight away. No, we need a narrative. We actually need to see the liquidity come in. One narrative is the Treasury General Account, which due to the government shutdown has more money piled up than its target. It could provide a positive flow back into the markets, which is positive for liquidity. The end of QT is also often positive for liquidity because we are in a fiscal deficit. So we have been having liquidity boosts all the way while we were reducing the balance sheet. And that's what they call stealth QE. And that also means that as soon as we stop the official QT, normally the liquidity would be neutral for a while. But now I think because of the fiscal deficit and of the stealth QE, we are actually not neutral, but slightly positive. And then TGA and other metrics are basically adding to that, which means that we are not flat, but slightly up. So that could be supportive. But it is yet to be seen. It is something we need to monitor now in the months and weeks ahead, how the Fed and the government will play the playbook. Last but not least, something I do want to share are different catalysts. So I tried to find different kind of catalysts. You can pause the video and read them. I'm not going to read them all. And I added an implication for the crypto markets to them. And when I look at various macro data points, then I have roughly 23 driving markets here right now. TGA, the Russia-Ukraine deal, PMI recovery, the dollar, which will be a whole different video coming up very soon, etc. I gave that a green score, a red score. I gave 2 a orange score because the dollar is in a downtrend, but there's a lot to be said about the dollar. Separate video coming after this one. And domestic liquidity right now is negative, but when QT stops at the start of December, then it will likely turn green. But right now it's still not. So it's kind of a non-event. We are near the end. Generally speaking, what I found interesting, and I did not expect this while I made this, is that we have a 65% odd percentage for bullish continuation, followed by macro data. And yeah, I did not expect that. And for me, it's interesting because that also shows you like the anomalies that I have been seeing for altcoins. Altcoins have been in a bear market, if you look at them, and they still seem, and it seems as if they are gaining momentum. And it really seems as if liquidity is coming back to the system. Macro indicators are also looking like they may be turning supportive, or many of them do. And I'm wondering if crypto will catch a bit, and mostly maybe not Bitcoin, but altcoins. It could provide some kind of 2019 scenario where Bitcoin does not make new highs, but just recovers, perhaps even ranges, while altcoins go through a whole different cycle, because we clearly see that the way altcoins and Bitcoin react sometimes has delays and has different reactions on macro data. And I really believe that macro data is driving this cycle much more than the 4-year cycle and supply and demand. Supply demand for Bitcoin has decreased by less than 1% prior to the halving event. The halving event is a non-event. It's only speculative because people think so. It's not an actually event as it was in 2013 when the rewards for the block size reward went below 20%, and then after in 17 when it went below 6%. I mean, those were big supply shocks, which drove up parabolic markets for crypto while it was a small asset class. But right now it's big, and the halving is a non-event. So I really think macro is something to consider on top of crypto-specific indicators. And while they may have a different kind of dynamic, they do move in tandem in the big picture. But this is starting to look to me as potentially seeing some kind of relief and momentum for altcoins, while Bitcoin may have seen it already and is Wyckoff distributing to make lower prices, while altcoins do the opposite. So yeah, I will make another video about it, talking about DXY and some other macro metrics. I hope you enjoyed it. If you did, please give me a like and a sub. I put a lot of work into providing this content for you. That would be much appreciated. Take care, guys, and talk to you later. Bye-bye.